Well, I was told to take a look at Crowdstrike stock, and as you see, what a shocker. After hours up 20%, which is a result of an earnings report they just reported. I was told to take a look at it, and well, I think it's time to take a look at it because would you look at it? Obviously, it might be worth taking a look at when it's up 20% after hours, right? So, Crowdstrike is a cybersecurity company, really focused on cloud-based security. So, I'm going to take a look and see what this company has to offer, as naturally, what they do is very oriented with just how the future tends to be. So, it's interesting. I'm looking a lot to diversify more into future-related companies, companies that'll be around hopefully at least 10 years, because they'll become more relevant and more of a regular daily life type company. So interesting. So let's take a look at Crowdstrike, see what they have to offer for me, right? So Crowdstrike beats on a non-GAAP EPS standpoint by 6 cents. They reported a negative 2 cents. And from a GAAP perspective, negative 14 cents, beats by 3 cents. So not too big of a shocker, but I say that just because the fact of the matter is a lot of these new tech darling IPOs, they absolutely suck at making profit. They can't make profit, and this company's close to break even, so I gotta respect them for it, no doubt about it. But again, I like to see profit. We're talking about a stock here that since IPO, obviously, which was in last year, as you see, is technically down from IPO, but if you consider the fact that they're down, 30% this month, that's really where you see the difference there. After IPO, they shot up a solid 50%. So as it being a newer publicly traded company, I'm not extremely upset about the fact that profitability isn't quite there, but there's some other factors that interest me. So obviously you see from the revenue line here, 152.1 million, which is an 89% year-over-year growth. They beat by 14.3 million on that aspect. So that's a big beat when you're talking about numbers that low. By numbers that low, I mean, 150 million is enough to have 50, generations of my family retire without having to work a single day in their life. But regardless, it's a small number for a big old tech company, you know what I mean? So it's a smaller number as far as that's concerned, but that's a very good beat. We see also advertisements that we don't like. They always try to hit me with those advertisements. So Crowdstrike reports quarter 4 results with revenue up 89%. Subscription revenue was 90%. So ARR is the annualized recurring revenue. So that's revenue they get every single year. It's going to be subscription based. Rose 92% to 600.5 million. Wow. Which included 98.7 million in net new recurring revenue added in this quarter alone. So that's pretty significant. They just added, a sixth of their recurring revenue in one quarter. So that's very nice. Subscription rose 7 percentage points to 77%. So growth in subscription, recurring revenue, love it. Cash from operating activities grew from 15.8 to 66.1 million. So an increase in cash flow is nice. Free cash flow was 50.7 million compared to negative 0.1 million last. I mean, this is nice. That's a company that barely, it didn't technically make profit here, but they increased the free cash flow, and I really enjoy that. So there's a lot of factors we got to look at, but still, I like it so far. This company's looking pretty darn good. The question now becomes valuation. So for Q1, Crowdstrike sees revenue of 164.3 million to 167.6 million versus a consensus of 149.14 million. So way over consensus, all things considered. That's way over consensus. 15 million over consensus at least, which is big when you're talking about numbers that small again. That's big. and loss per share of 6 cents to 7 cents versus a consensus of 8-cent loss. So nothing really big factor as far as that's concerned. Still a negative. Negative earner for sure. For the full year, they're expecting revenue of 723 to 733 million versus a 679 million consensus. I mean, that's a big difference there. I mean, you're talking nearly 50 million difference in terms of consensus to what they expect. So that's huge, especially in an epidemic like this where stocks are getting hammered. That only seeks to benefit CrowdStrike when they're reporting revenue like this. And this is a little bit of an aside, but again, once companies start normalizing their guidance back to where it should be after this whole thing is over, you will see stocks rise pretty rapidly. I'm just going to warn you that one right now. So just keep an eye out for that. But they also expect a loss of 10 cents to 14 cents versus a consensus of 18. So a good increase in terms of EPS as well. So you like to see that. Let's take a look at some of the fine details. So obviously they're going to start saying they achieved $600 million in annualized recurring revenue. Good for them. They delivered positive cash flow from operations and free cash flow for the quarter and the year now. Love that. So, obviously, as they want to mention, they got to explain the company. CrowdStrike is the leader in cloud-based endpoint protection. Look at that. So here is just some words from the CEO, George Kurtz. That's right, his name's Kurtz. CrowdStrike delivered a record-setting fourth quarter to conclude an exceptional fiscal year. With ARR reaching $600 million, we continue to see broad strength in multiple areas of the business during the quarter, including 90% year-over-year subscription revenue growth, record net new ARR, and accelerated in net new customers. Throughout the past year, we continue to execute on the increasing demand we see in the market and security cloud vision we pioneered. Looking into fiscal year 2021 and beyond, the powerful combination of our cloud-native platform and frictionless go-to-market positions us well for the fundamental endpoint platform for the future. There you go. Very exciting stuff. So obviously we talked about revenue there, average recurring revenue. We talked about that. Net loss is an important one. Net loss of $28.4 million compared to $31.1 million in the same quarter last year. So a little bit of an increase in loss, but not a significant one. You'd like to see a little bit better of an increase in terms of loss for sure. So, you'd like to see it at least. So, what can you say? Cash and cash equivalents increased to $912 million as of January 31st, 2020. So, and we'll look at the full year, which is what we like to see. It's full year. Net loss for the full year was $141.8 million compared to $140.1 million last year. I mean, again, it's relatively flat year over year, but $1.7 million means a lot to me, but not to them. I personally am not a huge fan of this, just to the fact that they, I don't know. From my perspective, I'd rather them decrease the loss, but what can you say? And from a EPS standpoint, GAAP net loss per share was 96 cents compared to $33.12 of last year. So, again, it looks like increase in share count for sure is a good factor as far as that's concerned. So, non-GAAP net loss though was a significant difference, $62.6 million compared to $119 million. So again, those numbers can get fudged just a little bit of fudgery. I mean, shouldn't say that, right? Fudgery's gross. Shouldn't say that. I'm sorry. So recent highlights: they added 870 net new subscription customers in the quarter for a total of 5,431 subscription customers as of January 31st, 2020, representing 116% growth year over year. Crowdstrike subscription customers that have adopted 5 or more cloud modules increased 33% as of January 31st. They launched Crowdstrike Falcon Spotlight app for security operations, which integrates real-time endpoint vulnerability data and patch validation with prioritization and response workflows provided by ServiceNow and is available in the ServiceNow store. Cool stuff. New product launch. You really like to see that. Announced extending the capabilities of the Crowdstrike Falcon platform, award-winning endpoint protection and endpoint detection and response to provide visibility specific to workloads hosted on the Google Cloud Platform and Microsoft Azure to provide EDR and runtime protection for containers. Falcon will now provide comprehensive visibility into all 3 leading public clouds. That's obviously good news. You love to see that for Falcon, for CrowdStrike's Falcon platform. You really like to see that. They introduced endpoint recovery services to accelerate incident response and remediation. Sorry, I couldn't really say that one. That was rough. This new offering combines the power of CrowdStrike Falcon platform, threat intelligence, and real-time response to accelerate business recovery from cyber intrusions. And they promoted Michael Santonis to Chief Technology Officer, the CTO, as we like to call him. He joined CrowdStrike in 2016 and most recently served as the company's Vice President of Technology Strategies. As far as the outlook, we took a look at that already. What I'd like to do now is scroll down and see if they could show me that balance sheet just a little bit, right? I keep right-clicking. That's my apologies there. So let's look at that balance sheet, huh? So from a balance sheet perspective, they've got current assets. From a cash and cash equivalent standpoint, they've increased it significantly, $264 million versus an $88 million as of last year. Big increase there. Marketable securities, huge increase in marketable securities. So from a current assets perspective, they have 3 times the current assets that they did as of last year at this time. From a total assets as a whole, again, it's 3 times the amount. So that's some good stuff. You like to see that. I like seeing that. But then the question becomes, did they also increase the liabilities in that same time? I'd like to know. So from a current liabilities perspective, total current liabilities is pretty low, all things considered. They didn't nearly double the total current liabilities. So you don't necessarily like to see it, but again, that's $1.17 million in current assets versus $493 million. That's $1.1 billion in current assets versus a $493 million. So they have double the current assets of current liabilities, and for total liabilities, only $662 million versus $1.4 billion in current assets. So again, they've doubled the assets that they do in terms of that. So I'd like to see that. You like to see that. And we're talking about previously where they had a total stockholder debt, actually, or deficit, as you might say, of $487 million. Now shareholders are over by $742 million. That's good numbers there. CrowdStrike is a freaking it's a beautiful company to look at this moment. I think they could really increase on the profitability standpoint, but I like what this company is doing, and I'm going to do some deeper research for sure to find out if this company is worth buying right now. I think after this recent jump here, we may not be looking to buy just because, again, it went up nearly 30% today, but if we have another down day in the market, I think I might consider buying this one. I think the company's very well poised for the future, and I think they could have big success. I'm pretty excited for what this company has, so I'll be keeping an eye out on this company, just so you know.